Hello and welcome back to another video. I'm your beautiful host, Young Buffett, and in today's video, we're going to be talking about something we haven't talked about in a very long time, Clover Health. And the reason why we haven't talked about it in a very, very long time is because I always say in all my videos, we have to be finding the bull. Find the bull market. Always find what's profitable and what makes sense. And when things aren't going your way, there are other things that could be going your way. And that's exactly what we've been doing. And that's exactly what we've been talking about over on my Finery page. It's my free investing group. We just hang out and talk about stocks and cryptos and NFTs all day long. But that aside, I noticed CLOV was up 4% today, which is very exciting. We're at $2.92. I mean, we were covering this thing back when it was $13, $14. And then it became 10. And then it became 9, and then 8, 5, 4, 3, 2. It even hit $1 like 90 something. But on this channel, we used to talk about the most talked about stocks on Reddit the past 24 hours. CLOV isn't even on this chart anymore. This thing goes to like the top 100. It's not there. I did a specific search to see where it was mentioned. It was only mentioned twice. And keep in mind, Ape Wisdom covers Wall Street Bets, Wall Street Bets New, Wall Street Bets Elite, stocks, investing, SPACs, options, day trading, short squeeze, and squeeze plays. I mean, this stock is becoming less and less about a squeeze and a gamma and all this stuff. And it's becoming more about a legitimate company that could have great potential if you just start dollar cost averaging your way into it. And we'll talk about that in this video. We used to cover swaggy stocks that talks about the Wall Street Bet sentiment and internet mentions and all this analytics about, oh, what are people talking about? Where's the money going? CLOV barely has any useful data on this chart anymore. So we're not going to talk about that. I scouted through the Reddit page, and this is kind of what inspired me to talk about this today. Hit 3,000 shares today with an average of $5.44. I first bought in at $17. I'm not fucking leaving. That's great. And my point is, this guy gets it. You understand when a stock goes down, what do? If you believe in the company, if you think that the company is going to continue to do what they're doing now, but better in 5, 10, 15, 20 years from now, you're going to love these prices. You're going to love the way you look. And if you liked it at 28, you'll definitely love it at 195. And right now, CLOV is sitting at, let's go to the daily chart over here. CLOV is sitting at $2.95, $2.92-ish. And if you notice, the chart kind of looks barcodey. And that's oftentimes due to algorithm, whatever the word is, that type of trading. It's bot trading. It's just a bunch of people buying it, but then the bots just kind of control the price and make it go up and down, up and down, up and down. We used to take a look at max pain. We used to take a look at the options volume. We can continue to do that. It's whatever you guys are interested in learning. Earnings is coming up. We can review that. But pretty much all you need to know is if you like a stock and if you think a stock is doing what they're going to be doing today, but better in 5, 10, 15, 20 years, this is the time when you start dollar cost averaging your way into a bigger and bigger position. And I love seeing this. I love seeing this guy first buying in at $17 and working his way all the way down as the stock continues to plummet. Whenever he gets a paycheck, you put a little bit in and you just keep adding and keep adding. But don't forget, there are other stocks as well. That's my biggest point, is the stock market is not just CLOV. Okay? There are other stocks that we can talk about. There are other companies that we can scale in. There's a lot of macroeconomics at play here. Stocks go up, stocks go down. If this is a company that you believe in long term, this is the time that you start scaling in. And speaking of dollar cost averaging in, there's another way that you can start scaling in or collecting money from a stock like Clove. Now, if we hop over to our trade, I oftentimes on this channel tell you guys to be careful of, over leveraging yourself or getting into risky positions by playing around with options. However, you could, now none of this is financial advice or recommendation to buy or sell any type of security or investment, but you could learn about and take a look at what you can do with selling premium. Now, if you have 100 shares of Clove, you could hop over to August 19th, for example, on the options chain. You can take a look at the $4 strike. Okay, so if you sell a call, that means you need 100 shares of Clove, and that means you are saying if Clove is above $4 a share by August 19th, I will sell it to you for $4 a share. So if it's $4.50, it doesn't matter. You were wrong. You sell 100 shares for $4. Now, that contract, you got paid $3 to take that risk, essentially. If your cost basis is below $4, even if you sell Clove at $4, you still made a profit and you collected some premium. It's a win-win, but obviously you miss out on if Clove went to 4.5 or 5, 6, 7, 8, whatever. But on the flip side, let's say you don't want to sell your Clove. Let's say you want to start building a position into Clove and you want to slowly dollar cost average your way in. Or let's say you just want to collect some money because you think it can't go any lower than this, huh? What you do is you hop over to August 19th as an example, and you find a strike price that you think Clove won't go to. Now, you want to be out of the money. You want to have a put that won't hit because all you want to do is collect the premium. For example, I don't think Clove will be under $2 a share by August 19th. That's my personal opinion. And for this example, if we were to sell the $2 put, it would give us $3. Now, big whoop, that sounds like a little bit amount of money, right? But keep in mind, Clove is $2.90. So that's a free share of Clove for taking that risk. If I'm wrong, if Clove goes to $1.50, worst case, I just have to buy 100 shares of Clove at $2. That's $200. That's not a big deal. And you get to slowly accumulate more and more shares of Clove this way and collect premium while you're doing it. Worst case, if Clove hits $1.50, you paid 50 cents a share more. You paid $50 more at the end of it if you multiply it by 100. You can just flip it right back and start selling calls because now you have 100 shares of Clove and you can sell it for more than $2. You can sell Clove options at $4, and best case, Clove goes to $4, and then you sell your 100 shares that you got at $2 at $4, and you just doubled your money. I mean, there's just a lot of options that you can play around with. No pun intended. But I mean, there's a lot of tools that we can cover. So let me know in the comments down below if you'd like a video that talks about this stuff, or we can cover this stuff. What kind of coverage do you guys want on Clove? I'm down to make some videos and talk about it and help create this educational environment about how we can scale into this. And there's also other options too. We can scale into other stocks. We can talk about where the bull is, like I do on Finery. There's a lot that we can do. You let me know. And with that, I love you, and I'll see you in the next video.